Good morning, everyone. We want to thank you for joining us today. My name is Rachel DeGrand, and I help coordinate the webinars for Houseman Johnson Insurance and the Benefit Services Group. We want to welcome you to today's webinar, Surviving and Thriving During COVID-19, Risk Management and Financial Best Practices for Contractors. I do just have a few housekeeping items before we get started. This webinar is interactive and will feature a question and answer session. You can go ahead and type a question into the questions feature of GoToWebinar, and we will address it after the presentation portion. Once the webinar concludes, there will be a short survey we hope you will complete with your feedback. This webinar will be recorded and will be available on the webinar archive section of our website, and each attendee will receive a follow-up email with a link to the recording and the presentation slides. I would now like to introduce you to our presenters this morning, Pat McKenna and Bill Nagy.
Good morning. Hi, my name is Pat McKenna. I'm the Assistant Vice President of the Surety Department, and I've been with Houseman Johnson for nearly 14 years. My background has always been in construction with surety. Started my career with USF&G, which is now a part of the Travelers. And Bill?
Hey, good morning, everybody. Bill Nagy here. I joined the HJI construction practice late last year. Been in the industry going on 4 years or so. Excited to be a part of the team and to share some valuable information with you all today so you can take a proactive approach with some of the upcoming challenges ahead. With that, I'll pass it back to Pat.
Okay, we'll get started. What we're going to be talking about today is a lot of the concerns that contractors have with regards to the COVID-19 and what can be done and what they should be looking at. Rachel, I'm going to need some help. I can't go through this. I can't move the screen forward. So we're going to start with some of the financial concerns, go through some project considerations, and then get into some of the insurance issues that you want to be aware of. Again, Rachel, if you could. It's not giving me the opportunity to move it. So
I'll go ahead and move them for you, Pat.
Okay, thank you. As we're going to be going through this, I just want to start with, this financial crisis is much different than the others we've witnessed over the last 20, 30 years, probably the history of all of our lives. It's a health crisis, and through government lockdowns, it's dramatically impacted our economy and has now become an economic crisis. With no vaccine or clinically accepted treatment, the future is unknown. How long or what else may happen, we just don't know at this time. That is why we believe your most important concern has to be for the liquidity and your cash. They are the lifeline for your survival. If we go into a long extended recession, which some people think could happen, I'm not predicting that, but they think it could happen. If it does, the most cash you have on hand is the best. It puts you in the best position to survive it. It's really important to know what your cash flow needs are. Usually you'll hear me talk about profitability and working capital. Liquidity and cash flow is the most important. Liquidity and cash flow is slightly different than working capital, because working capital includes some assets that may not turn for 30, 60, 90, 180 days, maybe less than a year, but you want to be as liquid as possible to be able to handle this. So with that, you want to know what your cash needs are. If you can do a stress test on your cash needs and your cash position, look at it for the next 30, 60, 90, 180 days, and do it with the mindset of what happens if one of these jobs that we have ongoing right now is put on hold or is pulled, or there's some other negative impact on that. Because you just want to make sure that you do have as much cash on hand. A rule of thumb has always been to have 6 months cash as a baseline. Anything above that is great. Anything below that is an area for concern for you to look at. It's not to say that if you don't have it today that, oh my God, what's going to happen? But you just want to be more cognizant of the fact that you're below that limit. So you want to be looking at the different things that you can do to extend your payments, or maybe to turn your cash, your other assets into cash as quickly as possible. You know, and also look at what your cash needs will be for as you're going to be starting up new work, or for you know, if you have to replace equipment or anything like that. Rachel, I guess it worked for me this time.
All right, I'll let you take over then.
Yeah, sorry. I say that, now it's not working. Rachel, it's not working. So the PPP program has made a lot of news, and if you have not applied for it, I don't know what the current standing is, if all the money is out for the second portion of it that's gone through. But I want to focus in on a couple of things. One, you want to do everything you can to turn this from a loan into a grant. And that means you've got to keep all your documentation. You've got to meet all the thresholds that they have for you to do that. They talk about, you know, to pay for your payroll and to pay for your rent, and make sure that you're documenting the monies that are going to do that, to service that, so that you can turn that into a grant. The other part of that is that on April 23rd, the SBA came out and gave some guidelines, and these guidelines that they gave are a little bit confusing. People are not really sure what to make of it. The impact is unknown, the terms are undefined, but there's some great concern that, you know, should you have until May 7th to forgive the note or to return the note without any penalty against you, and there's some concern that could you be at risk for either criminal charges or civil penalties. I'm not here to make a judgment on that for you, but I'm just here to tell you that what you want to do is to document everything that you do to make your decision. What impacts you are concerned about at the time you made the application for the PPP. You know, the future is unknown, and you don't know what disruptions are going to be on your jobs. You don't know what supply chain issues are that are going to impact that. So I would just recommend that you maintain your records. If you see something in an article that is talking about things that are going to potentially impact your business, I would put that into a little file for you to use in case you do get audited. They have said that they're going to audit any company who's taken over $2 million in loans, but they've intimated that they are going to be auditing every company. I don't know what that means. Nobody really knows what that means, but the more communication you have, the better. The other thing I would recommend is that you look at the records that, or ask for your creditors to give you some information to keep in your records as to what they are looking at, what their concerns are with the current economic condition, and they'll be more than happy to give you that. I know that on the surety side that everyone is concerned, all the underwriters are concerned about what's going to happen. What's going to happen if some jobs are held? They're not going to know the impact for several months, because there's always a lag between when it happens and when they get the information. So I do know that the surety companies are concerned about what impact it's going to have. So reach out to your agent, your underwriter, ask them to give you the information. Also reach out to your banker, ask them, you know, to give you some information on that. So the more you have, the better position you're going to be in. Also, now changing gears slightly, there's an adjustment, or there's a new workers' comp class code. Bill's going to talk about this a little bit more. It's class code 0012. It's for furloughed employees. It's a way for you to pay the employees and not get charged with workers' compensation as they're furloughed. And then the other thing that Bill is also going to be talking about is adjusting premium exposures. Another way to help save cash and to maximize your cash. Rachel? Accounts receivable. When we get into times like this, one thing that we all know is that private companies tend to really watch their cash. Your receivables could slow down. Any day, anything over 30 days, you should be on it really quickly to try and get these turned into cash. Do not let them go too far, because if they go too far, you're going to be extending yourself even further as they're going to be adding up, and you don't know what kind of financial issues that they may have as well. So you want to make sure that you stay on top of your receivables. Be diligent as possible. You know, before you sign a contract, confirm where the funding source is and the amount available. Make sure you know how much is available for the hard costs and the soft costs. You want to know how much is going to be available for your construction project. And if you are going into, and you're going to be doing any change orders, you want to make sure that there's sufficient monies left over to be able to satisfy the payments for those. You know, back in the late 2000s, when we went through the economic crisis caused by the housing industry, that was a banking crisis. And one thing that we saw then was that, you know, the banks they started to they would lend money on a project, and then they would have permanent financing to take out the construction loan. And at the end of the job, say it was $1 million job or $1 million loan, and the project went to $1,250,000. The owner went to finance the $1,250,000, and the bank said, no, we gave you $1 million. We didn't agree to $1,250,000. The $250,000 is yours. Well, that $250,000 is your last payment and your retainage. So you want to make sure that the money is there to be able to cover any change orders. I don't know that the banking industry will be going to that extreme again, but they're concerned too, because they are going to have some loans that are going to be in default. They're going to have some slowness in payments to them too. So this could turn into a bit of a credit crunch. Just something to be aware of as you're going through this. Also, you know, look at if you're a subcontractor, is a general contractor bonded on this project? If no, you want to make sure you know what the funding for the project is. You want to follow up on those terms, because you're just as much at risk for the end to get paid as they are. And you want to know what the terms are with the owner, and make sure that when they get paid, you get paid. And then lastly on receivables, this is an insurance item, but trade credit, and again, Bill's going to talk a little bit more about that, but it's a way to hedge some of your concerns on receivables, is to get an insurance policy to cover the trade credit that you have for receivables that are uncollectible. Thank you, Rachel. You want to watch your spending. If you don't need it, don't buy it. Right now more than ever, at least in the next several months, until we know what is going to happen. You know, what are we going to be able to get back to what was normal, or are we going to have a new normal? What is that going to look like? You just want to be as conservative as possible. And so if you don't need it, don't buy it. Evaluate your fleet and equipment needs. You know, if you feel that you need to replace a piece of equipment, you know, do a little bit more evaluation to determine, you know, can I get by with another season, another year, by extending the life through, you know, repairs and maintenance at a little bit less cost. They're always going to be making equipment, so it's not that you won't be able to get it down the road. The other is, should you rent versus lease versus purchasing? Right now, you want to focus in on what's going to be the best for you in the short term and not pinch you in the long term. If you purchase it, you know, you may be able to finance it, but you've got it then for the life, and you've got those payments to make. And who knows what happens down the road with work. You may not need it in 6 months. So then you want to look at more of a renting versus leasing or purchasing. Just do the evaluation and do it, you know, in the best interests of your corporation. And then sell whatever you do not need. You know, if you use it infrequently, you can find other means. You can rent it or you can lease it. If you if you're not going to need it that year, consider selling it. Just turn what you can, turn those fixed assets into cash. And then be careful assuming any additional long-term debt. You don't know what impact this can have on the banking industry. As I said, their customers are defaults. Watch your covenants. Watch out for the Fed tightening on private lending. You just want to be careful assuming additional long-term debt. I'm not saying don't do it, but just be careful because you don't want to overextend yourself on a debt basis where you're going to have more cash to pay out down the road too. One thing you can look at is your line of credit and maybe terming out a portion of that line of credit. Because if you term it out, that will take away, because they can call that line your working capital line at any time. So if you consider terming it out, terming some of that out, that can save you on some of the expenses. Also, one thing and this is going to fly in the face of what I just said previously, but right now is the best time to refinance or to take additional financing, but more to refinance because you can get it at some additional cash with the decrease in the credit terms or the interest rates that the Fed has a 0 interest right now. So if you refinance right now, you should be able to pick up a little bit of spread in cash. That'll be able to help you and save you a little bit more. But I would caution you to negotiate today as you look through your potential cash needs. And if you see a pinch point where you're going to need cash, you don't want to wait until you're getting close to that point or when you're at that point. If you do that, it may be too late. Right now is the best time to be talking to the banks about that. They've gone through the financing through the SBA with the PPP. But right now they've got an ability, or you've got the ability to at least have the discussion with them when you're not in a need, you're not in a desperate need, and should be able to work with you. And you want to do it sooner than later, just because of, as I said previously, you don't know what's going to happen in the banking industry. If this does impact them negatively, if it impacts terms, conditions, you just want to be cognizant of that, and I have heard that their approval process is slowing down. Are they going to be tight? They appear to be tightening a little bit on their lending requirements. So the longer you wait, the more severe that could be. And watch your distributions and your profit sharing as closely as possible. You want them to limit it at least in the next 3 to 6 months. You have, if you're a sub-S or LLC, take it out for tax purposes. But beyond that, you want to keep it in the company as much as possible and avoid any officer, shareholder, employee receivables. Then lastly, which expenses can be deferred or canceled? As I said previously, if you don't need it, then don't. I wouldn't buy it. By the same token, if there's an expense that you currently have and you don't really need it, you may want to consider either canceling it or deferring it. Rachel. Now on project considerations, you want to know you want to look at what your current backlog is and really know what the status is to a real true take off on, okay, what happens with these projects if, are there any that could get delayed, any suspended, canceled? If you've had some already, what's the prospect of those coming back to life? Anecdotally, I've heard of some private owners that have been deferring or taking off the board contracts that they were expecting to do. Some have been holding, others, delaying it either through force majeure or through just, that they want to wait and see what happens. But you want to know what projects could be at risk for you, because that's the money that you're expecting to come in. And are there any work stoppages or delays that you've currently experienced? Are there any that you anticipate could happen What about your supply chain? Look at it 60, 180 days. What the things I've heard so far is that the supply chain has not been impacted greatly, but the expectation is that that's going to change. You know, what happens when some of the stuff that was to be manufactured and shipped from Italy or from China, is there going to be an issue with those? What about other things coming off internationally? Can we see some delays? Are you able to find any substitutions to be able to keep the project going, or will that put some type of a hold on the project as well? You know, just really get to know what the risks are. And what about your subs? You know that you're having some potential concern about what's going on. Well, what about them? Are they having any problems? Have they been impacted on any of that other work? Because that could come down and impact your work. Just communicate. You want to communicate up and down as much as possible with the owner, with all the subcontractors, suppliers, and keep the communication open so that you know when the issues are. You know, the other thing, and I haven't heard too much of it yet, but I have heard some where some companies have been impacted by COVID-19, where they've had the illness go through their company, and some of their jobs have been, you know, slowed or put on hold because of that. And so you need to know what's going on elsewhere in those organizations, so that could impact you. We know that the social distancing, the safe at home guidelines that have been put in place, they have created some loss in productivity. What impact is that going to have on the profits that you have on the jobs? And you know, what happens if you have some employees that they've chosen to stay at home and they don't want to come back, and you need more employees, but they're concerned about coming back right now because there is no vaccine and there is no true treatment known. Those things can impact your job. And what happens if there's another outbreak? If once we do the Badger bounce back and we do start working again, could there be other shutdowns? What impact will that have on you, on your company, and on your employees? Future work, you want to understand the force majeure clauses that have been in the contracts. People really didn't pay that close attention to them. You know, they just were always there, but it usually, you know, it was for war or insurrection, weather, you know, things like that. Never really thought of health being an issue for something like that, or being shut down because of health. So you really want to get to know the force majeure clause now a little bit more, and how will that come into play with your contracts, with what's going on now? And look for new onerous clauses being inserted into contracts. I've heard in other states where some public bodies have tried to push to the contractors all the risk of the COVID-19 if there was any stoppage in the work. It's all at your dollar, all at your risk, all at your exposure. Make sure you know that and negotiate those out before you sign the contract. Once you sign the contract, as you know, it's too late to get those things taken out. So just look and see where because they're not inserting them necessarily in the places you would normally expect it. It could be somewhere different, and just read through the contracts as closely as possible. And
also, just on top of that, Pat,
yes,
just make sure you're disclosing policies and procedures around that if there were delays on the front end while negotiating some of these contracts. Just so you have a plan in place so the project can stay on track to the best of your ability, you know, barring delays, supply chain, whatnot as well.
Yep.
And the type of projects that you're getting into is going to change. The demand is going to change as well. That's just two things that I wanted to make sure I noted with some of the future work that I know many are facing right now.
Yep. We do know that, you know, right, that the state has said that they want to have budget cuts of 20%. How is that going to impact future projects that that are either in your pipeline or that you're anticipating will be in your pipeline? What about private work? Could those be delayed going forward? Jobs that you thought were definitely going to happen and now they may not. So just be really focused on what could potentially happen to your backlog, because that as you're gearing up for the work, you want to make sure that the work will still be there. As I mentioned, the supply chains and concerns and what happens if there's a second wave. Employees, one of the things that all contractors said had been holding them back over the last several years has been the lack of a labor market to pick up additional work. Right now, unemployment is at a staggering level, and they don't assume that that is going to go down anytime soon. So there is some, through July, there are some safeguards in place for unemployment that are going to protect all those employees that are out of jobs. After that, it's unknown. You want to make yourself as attractive as possible to actively go out and look for new employees now. This is the opportunity to handle the shortfall that we've had and get back into the construction industry. Some of the labor that we lost with the recession in late 2000s, 2008, 2009, 2010, where we lost so many of those employees and they never came back. Now's the opportunity to get some people back that may not have considered getting into construction, but they are now looking for a place to work, and you're an attractive place to be. Who knows what is going to happen in the future too with the what type of stimulus package they put into place. We know that construction is an essential business. Contractors are working. They're able to continue to work. There's a good chance that we could see a lot of money being pushed into the construction area by the feds to help jumpstart the economy, because one, you can absorb the labor that we have with unemployment, and two, it's something visible that people can see that they can really start to feel like, okay, we're going again, we're rocking again. So that it is, I think, a realistic likelihood that we could see a lot of money put into the construction industry. With that, we're going to need employees. So you want to make sure that you're in a good position to be able to get the best that there is out there. And then I mentioned this again for future work, the project funding. I went through this all before. I'm not going to go through it again, but I do want to emphasize that, it is it hits you in both places. One, under your financial, because if you didn't confirm it, it's going to be a direct impact to your balance sheet and your income statement. But also for project considerations, you want to make sure that you know where the monies are coming from. So the pros: construction is an essential business, and it's going to be looked at heavily to boost the recovery. Right now, management, office, and field are still in place and working. Maybe not 100%, and we're not working at 100% capacity. But we still are able to work, and we are still able to employ people. We can absorb new employees to help with the unemployment. We've got capacity. We've had capacity. The only holdback we've had over the last 5 years or so has been the lack of labor. So with that, I think that there's a real good chance to if you have all the cash in position, if you keep your cash in hand and you're all ready, when we bounce back, you have the ability to really take advantage of it and pick up some good new work and improve your financial picture and help out the economy at the same time. The Fed is looking to jumpstart the recovery. You hear that with Trump and the administration talking about it all the time. They're focused on the unemployment. They think that the next quarter is going to be a bad quarter yet. Then they believe that the third and fourth quarters will be better quarters. So we have the ability here, or we have the possibility to take advantage of it and really help with both getting the economy back on track, but more importantly, help with picking up employees, help with your financial position, help get new work. I do see some positives coming. I think that there's going to be some jumpy, rocky roads for the next 60, 90 days as we try and find out what the new normal is. And then we're going to be going into about 6 months of the unknown. Next year may be a little tougher in certain areas. And that's why I think that you're going to see some government action to try and really build up what, the economy and build up the construction economy. The concerns are, where's the work going to come from? Federal government's going to lead it, but private work's going to be a problem. The market is bouncing back a little bit, but it's not going to bounce back all the way right away. So a lot of people have lost money. A lot of companies have lost money. There's going to be funding issues. They may not need the new building that they were planning on building because they don't have the employees. If it's in hotel, restaurant, you're probably not going to see as much in that area. Right now, apartments are still going strong, but there's an unknown there. That I've heard some concerns that the residential housing market is starting to pick up because a lot of the people that have been living in apartments want to get away from living in buildings that you've got all those families lumped together where they're passing on the disease so rapidly. So that's a concern for some of the private work that has really been boosting our economy here as of the last several years. Lower fuel costs, DOT will get lower, they'll get lower tax income. They could pull some jobs. Will the DOA pull jobs? Those are some things that we're not, they're unknown right now. But we do know that the state revenues will decline. So the feds are going to lead it. How much they can supplement the states and the local is unknown. Evers had already said to Trump in a letter that it's going to be a $2 billion deficit to them caused by the COVID-19. I don't know if this is going to be reality or not, but he's saying it's going to affect the next budget, that's for sure. Could affect current jobs or current prospects of jobs. Getting overstretched, office and management, equipment, financially. As I said, you want to do what you can to keep the equipment you have and not necessarily replace it where you're going to be expending money. But that could then overstretch your equipment needs. The supply chain down the road, just knowing what's happening with your manufacturers. Can they gear it up? Are they still working? Any of their plants shut down? Maybe not the one that you're thinking you're getting it from, but maybe some of the other ones, and that's going to impact the one that you're getting it from. And then the international material supply chain disruptions. Maintain your focus on cash flow, your backlog mix, and the subcontractor default. Those are your biggest risk areas right now.
Perfect. I'll take it and get more into the risk management and insurance piece, focusing on what some of the keys to success are. Really, we're going to focus on breaking it down into 3 main focal points. I think Pat's done an unbelievable job putting an emphasis on cash flow and how to improve some of that. We'll focus on a few areas within the insurance program to, one, help you understand what your current exposures are and how adjusting some of these exposures can give you, one, a more accurate forecast, but it can free up some of the, the overhead insurance expenses that you've been facing. Also focus on some risk transfer. Pat talked about some of the contract negotiations, how that landscape and some of the language has changed over the last couple of weeks that we've seen, and what to continue to look out for. Putting a focus on contractor partnership reviews, understanding what risk you're taking in, but also how you can transfer it away from your business. and then we'll focus on some of the risk management practices to help you be more proactive as well. There we go. Perfect. Projections and forecasts have obviously changed for many from the beginning of this year to where we are today. Your insurance premiums today are calculated on the exposures with payroll, revenue, your cost of work. That's how these premiums are figured through insurance companies and through carriers. Many people don't know that updating these exposures to adequately reflect the change that you have projected coming up for the second half of the year can relieve some of these insurance expenses. If your projected revenue is going to be cut in half, or your payroll is going down or up, you can adjust these to give yourself and give your company a more accurate forecast. Just a friendly reminder that these exposures and premiums are audited, so you can't pull a fast one, but it is something to just help your business become more accurate as forecasting and making sure that you have 6 months cash on hand becomes more and more important as you plan for the future. Getting into some of the workers' compensation expense. This is such a large overhead expenditure to anybody in the construction industry. Had mentioned the new code that just came out, code 0012, focused on furloughed employees that you have. The reason why this is so important is that it's a $0 rate due to no exposure. Your employees are not working, they have no exposure out in the field. So to get this, you need to make sure that it is documented and the records are kept. If they are not kept, all of the furloughed employees are going to be expected and assigned to the normal class codes. There have been a couple unique amendments within the work comp industry, and this has gone back and forth. We've seen it with Illinois and some others in the essential industry. The reason why I bring this up, whether these claims are going to be covered under work comp, whether they're not going to be covered under work comp, understand that insurance markets and insurance carriers, they're facing some unique expenses. So the market is going to continue to change, and we're talking work comp now, but we've seen it with some of the management liability on how some of these claims and how this has been handled. But you're also, seeing a stress not just on insurance carriers, but also employers and the traditional claims process and procedures when it comes to the pandemic and certain issues we're dealing with today. Getting into the risk transfer practices, the way that we've witnessed and viewed construction contracts have continued to change and will continue to. We advise you to develop a process and a strategy to take on these items. Designating an internal team to really champion this is going to be key to make sure that you're transferring all the risk away from yourself, not taking on extra risk. We advise you rely on some of your trusted advisors. We at Hausman Johnson, we're not attorneys, but we advise you to trusted attorneys and some of the relationships you really rely on through this process. Also, identifying the risks that you're currently taking on. Some of the unique indemnity provisions, some of the traditional ones, some of the boilerplate, how the contract language has evolved with, some of the force majeure language, and, how is that defined in that contract, and, what processes on the front end or in the midterm, how's that communication working with some of the ownerships and some of the subcontractor groups, just to make sure that you have the policies and procedures in place so the project can, continue to move forward.
Bill, can I? I'm sorry.
Absolutely, Pat. Yeah, jump in, man.
Yeah, one other area to look at here too are the damage clauses, especially because it's an unknown as to what the force majeure would it cover if you're shut down. Would it allow you to have some relief under the contract? If not, what about the damage clauses for for delay or not bringing the job in on time, or the consequential damages. You have to know all those all together and make sure that you're well aware and you've got those risks covered as best as possible.
Absolutely, Pat. That's a great point right there. And it comes down to just the communication. And that's just going to be so key moving forward as we, continue to work through some of these contracts and however that risk is being transferred, just really understanding and getting a better grasp for it. And from an organizational standpoint, having those internal discussions on what risks that you and your company are willing to retain. And if you're not willing to retain them, how are you going to transfer it? Is it going to be through an insurance mechanism, a product, or is it going to be through a contract? And really just continuing to educate your team through this process. Risk retained unknowingly is always going to be the most costly to you. Pat talked about this as well. I'm going to go into a little bit more depth, but just getting into the vetting process for partners, for subcontractors, for individuals that you work with, and having the opportunity on the front end to really revisit this process, fine tune some of the details, and understand that this is going to be important. And as you continue to make ends meet, depending on what niche or what projects you've traditionally worked on, there's the comfort zone and then there's the uncertainty zone. And understanding how fragile that is when you enter into some of these working relationships, and knowing that the demand for certain projects will change, make sure you're detailed in your research and your process. Also wanted to note, visiting insurance limits right now, reviewing your subcontractor agreements, just continuing to review how you're transferring this risk, and also as you want to make the forecast as accurate as possible, just understand what the deductibles and some of the retention, and also having the good carrier communication, so there are no surprises come renewal time, and you're able to accurately forecast that into future expenses. That's key. Nobody wants surprises, especially when it comes to the insurance market and some of the uncertainty that may be ahead. Getting into the trade credit insurance, Pat talked about this as well. And the unique thing about this is this insurance product is really highlighted, and the reason why this is brought up is for times and circumstances like these. The reason why we bring it up, we've had a number of questions, and also it's a way to help protect your accounts receivable. Essentially what it is, it's an insurance product that insures your accounts receivable. And as we've talked with a number of contractors and partners, vendors, the traditional 30 to 60 day account receivables have doubled to 120 days. We've seen instances where it's even more. This has been a exposure that has been self-insured for a long time, and many people are unaware of the insurance product like this, but just understanding the risks when cash is so important right now. Understanding that this is a business risk, but there's potentially ways to transfer this to an insurance product. Not sure how economically feasible this is in the now, but as you continue to move forward, I'm sure there will be opportunities to address this need. Continuing with the risk management practices, really it comes down to just taking proactive measures, protecting your workforce, and getting ahead. As Pat talked about, employees are your most important asset. This can be an opportunity for you to find some employees and take care of the ones you have. There's nothing more important than making sure that the people that are working under your roof and working under your company are taken care of. Continue to educate. And there's so many guidelines in place today, right? And unknown to what extent that these will change when it comes to these guidelines, and then all of a sudden what is going to be a rule versus a guideline, but just continuing to stay updated and be proactive with it. Communication, that's obviously, we've hit on that numerous times. And really the way that communication over the last couple weeks has changed, not just in the construction industry, but for all industries. And with that, you're starting to see a heightened risk from a cybersecurity standpoint. The number of claims have, elevated and risen exponentially. And I expect these to continue to, as the workforce and some of the way that we traditionally communicate. And this can also be an advantage to you if you set up a process and procedures and take advantage of some of the technology to help keep, one, your employees safe and healthy, but two, take advantage of some of the unique edges you can get just from a I guess you could say an advantage within this. Take advantage of it. Continue to document all potential delays, what the cause of the delay is, notify all parties in writing. This is something just to make sure that you transfer as much liability off of your plate and document it, as we're in, there's a lot of unknowns right now. Make sure that you take care of yourself and continue to document these as well. Getting into some of the operational practices, the construction industry is changing in a number of different ways. Job site safety, sanitation, a number of things will improve. Technology will be relied on a lot more. Projects potentially will be starting to take longer than traditionally. And also just the demand for certain projects are going to change. Keeping a running record of some of the unique expenses and really trying to project some of these unique expenses as well when it comes to, delays, equipment, material costs, potential overtime, just a number of items that I know Pat brought on a bunch, but just continuing to emphasize the importance of cash flow and how that can be reflected and really, taken advantage of through your risk management program. And wrapping this all up, and I'll transfer this back to Pat, really what does it all mean? And Pat, I'll let you take it away. We have a couple more minutes before we open it up for questions.
Okay, yeah, the concerns that we've said that are out there are the operational shutdowns, project cancellations, supply chain disruptions, slow uncollectible receivables, access to credit becoming more difficult, and watch your own covenants. Those are the things to be concerned for. Right now is the focus on survival, and then once we get back into a new normal, then the focus is going to be on, okay, now how do we get out of here and start taking off again? But when you survive, that's when you're able to really take that advantage. To survive, you got to maintain your discipline, be nimble. You have to prepare for more of the unexpected. Are we going to have another outbreak? Are we going to have a recession? How long will the recession last? Could it be a double dip? Just be prepared for the unexpected. Is the state going to pull jobs? Are they going to, what about the private owners? Are they going to pull jobs? We don't know, but stay nimble, be prepared to go in whichever direction the work is. Be prepared to take advantage of, then you'll be prepared to take advantage of the recovery. You want to know your strengths, you want to know your advantages, you want to know where you are better than your competition and where you're weaker than your competition, because that is how you're going to focus, or you're going to take the focus on your business, and you're going to take the strengths and your advantages, and you'll be able to really take those to the next level against your competition, and just be prepared for what's out there. Focus on your cash, focus on your project integrity. Rachel, if you can move it, please. You want to have your management and everybody ready to roll. Everybody, the project managers, your estimators, you're ready to roll once it takes off again, because it will. We took off before, we'll take off again. This is going to be short-lived. For how long that shortness is, we don't know. But while it's there, you want to, and Bill emphasized this a lot. Communication. You want to communicate, and then communicate some more. Communicate with your key partners, with your employees, with your bankers, your sureties, all your creditors, the owners, the subs, suppliers. You want to be in constant communication because this will do two things. One, it'll help soften any problems that you'll run into because one, you'll be aware of it, or two, they'll be aware that it's coming and they'll work with you. But if you communicate, you're going to learn more and you're going to be able to share more. And that's going to help you and your company out for the most. And you watch out for all the cash demands, supply chain concerns. Too much too soon, that's when contractors get into trouble. Economic upheaval with private owners, private work, funding sources, a second wave of COVID-19, and another expected downturn in the economy. There will be another downturn in the economy. We don't know when. We don't know how long this is going to last, if this will dip again next year. But there is a lot of concern right now about the taxes we're going to have to be paying for all the monies that have gone out to help companies stay afloat and stay alive. There is going to be a money call for that someday. How much that's going to impact our economy is unknown. But we've gotten through it before. We'll get through it again. And with that, Bill, do you have anything to add?
No, I mean, Pat, you did an awesome job. It would just be, continue to have good communication and, be persistent and document everything. Just keep working through it. But yeah, no, I think that wraps it up, and we can open it up for questions.
Great. Thanks, Pat and Bill, for the great presentation. There's a lot of good information there. If you do have a question for either Pat or Bill at this time, please go ahead and type it into the questions feature of GoToWebinar. I know we are getting close to the top of the hour, so we'll give you a couple minutes. If we don't have time to address your questions, we'll be sure to follow up with them after the webinar concludes. I'm also going to bring up Pat and Bill's contact information so that if you did want to reach out, you can definitely get in touch with them and they'll be happy to answer any of your questions regarding this information they've presented today. I don't see any questions coming in yet. I'll give you a few more minutes if you want to type them in as I wrap up the webinar here. Again, we want to thank Pat and Bill for the great information, and we want to thank you for attending today. Please remember to fill out the short survey, as your feedback is very important to us. We do have another webinar coming up this week on Thursday the 7th. It's Documentation and Discipline with Karen Bender, one of our HR consultants. So if you can join us for that, we'd love to have you. And with that, I'm going to go ahead and end the webinar today. Thank you again for joining, and have a great rest of your day.